Hi friends, this is Vijay Narayankar from Vijay's One Stop Investment Solution. On a special demand, I am preparing this clip to explain you the impact of recent budget. Now, as of now, all of us know that there is an old tax method, new tax method. Now, yesterday, Finance Minister has announced the changes, certain changes in the new tax regime or new tax methodology. Let us see what are the changes in three steps. First step is what are the deductions and exemptions allowed in the old and new methodology and also announced in the yesterday's new methodology. One. Step 2, we will see what are the tax slabs introduced, right? And third step is we will see with the class examples actually what is the impact on the tax calculations. So in this first table, I have explained in the impact of new methodology and that vis-a-vis the old methodology. If you see the standard deduction which was available in old and available till the coming financial year's new regime and yesterday's impact also. There is small change which is there in asterisk form, that is here the income is, if your income is more than 15.5 lakhs, then standard deduction which was allowed to you up to rupees 50,000 has been changed to rupees 52,500. That means increase of 2,500. The benefits under section etc, national pension scheme, home loan interest, mediclaim, etc., etc., which are available under old methodology are not available in new methodology, including the yesterday changes announced. So only one impact as far as the deductions and exemptions are considered. There is a change in the standard deduction to the extent of 2,500 rupees if your income is more than 15.5 lakhs. Hope this first table is clear with you. Now let us move to the step 2. Step 2 is the various tax slabs which are available in the old method as well as the new existing method, and there are certain changes made by the finance minister in the yesterday's announcement. We will see what are the old slabs and what are the new slabs. In the old method, there were only 3-4 slabs, that is up to 2.5 lakhs 0%, 2.5 to 5 lakhs 5%, 5 to 10 lakhs 20%, and more than 10 lakhs 30%. Right? There were only 4 slabs. Now the new tax methodology was having tax slabs change of 5% at the gap of 2.5 lakhs. That means 0 to 2.5 lakhs 0%, 2.5 to 5 lakhs 5%. Similarly, 5 to 7.5 lakhs 10%, 7.25 to 10 15%, 10 to 12.5 20%, 12.5 to 15 25%, and more than 15 lakh 30%. Now this new methodology which was there, or new slabs which were there, what has been changed into these new slabs? Now the change is, if you see, the slabs have been changed. Instead of the gap of 2.5 lakhs, now it is made the gap of 0 to 3 lakhs, that is with the 3 lakhs. So 0 to 3 lakhs 0% tax, 3 to 6 lakhs 5%, 6 to 9 lakhs 10%, 9 to 12 lakhs 15%, 12 to 15 lakhs 20%, and more than 15 lakhs 30%. So here we can see clearly what are the changes has been announced in yesterday's budget.
In this third step, let us see the impact of these changes on tax calculations. For better understanding, I have taken 3 cases wherein that Ravi, Sudha and Jay, they are having different incomes and the different saving options chosen by them. So let's see one by one how much tax they have to pay in the old method and how much tax they have to pay in the new method, that is recently announced method. And then we will see the comparison which one is beneficial. For example, in case of Ravi, his gross income is 7,50,000, and as you know, old method is allowing tax deduction, standard deduction, as well as the savings under various instruments, various sections. Let's consider benefit of that. So standard deductions 50,000, then interest on savings account which is up to 10,000. As you know, in my previous clip I have covered already this, and the other in savings, other investments which he did. For example, under section ETC, he invested 60,000 rupees. In NPS, there is no investment he has done, whereas he has taken a housing loan and that interest paid is 1 lakh. Similarly, Mediclaim. So if you adjust all these investments which he has done, including standard deduction allowed, the net taxable income of Ravi is 5,10,000. So we know that is a net income of Ravi is 5,10,000, and let's calculate the tax as per the slabs. We know the slabs also, that already I have told you. Up to first 2,50,000 he has to pay nil tax. Then next 2,50,000 rupees he has to pay 5% tax, which is 12,500, and the balance 10,000 rupees, that is 5,10,000 is his taxable income minus 5 lakh rupees, which we have already covered, taken calculated the tax. Balance 10,000 rupees at the rate of 20%, that is 2,000. If you add up these all, 14,500 rupees is the tax, and then surcharge on that, the total tax Ravi has to pay is 15,080 rupees. Keep in mind, his net taxable income is 5,10,000 rupees. That's the reason we have not considered exemption under section 87A. Otherwise, as I told you earlier in my earlier clip, if somebody is earning a net taxable income up to rupees 5 lakhs, then the section 87A permits him the deduction of the tax which is coming out of these calculations. So if income is up to 5 lakhs, 12,500 rupees is the tax to be paid, and exemption allows that 12,500 rupees waiver. So net tax he has to pay at zero. Here Ravi has to pay this much tax only because his net taxable income is more than 5 lakhs, that is 5,10,000. In case of Sudha, her gross income is 10 lakhs. She has also invested in various instruments, and in the similar fashion, if you calculate the net taxable income, it is coming to 6,15,000. Let's calculate tax for the Sudha also. First 2.5 lakh 0, the next 2.5 lakhs 12,500, the next amount as 6,15,000 is the gross income minus 5 lakhs on which tax is already calculated here. So 1,15,000 into 20%, so 23,000 rupees is the tax. Add up this all to add this to onto that. Total tax which Sudha has to pay is 36,920. Right? Now, in case of Jay, wherein his gross income is 17 lakhs, and similarly, he has also chosen investing into various instruments as per his ability and capacity. So, after factoring all these, his net taxable income is 12 lakh 15,000. So, let's calculate tax also for Jay. First 2.5 lakh 0, the next 2.5 lakhs 12,500, next 2.5 lakhs 50,000, next 2.5 lakhs 50,000. Keep in mind here why these two figures are coming similar, because 5 to 10 lakhs tax bracket is same. That's the reason this amount is similar. And then more than 10 lakhs, that's the amount here tax is calculated as per the applicable slab, which is 30%. So total tax he has to pay is 1,77,000. Add surcharge to that, is net tax to be paid by J is 1,84,080. So these all calculations of Ravi, Sudha and Jay, how much is net taxable income, how much tax they supposed to pay as per the old method we have understood here. Now let's apply the new announcements which has been done recently by finance minister to their income, and let's see how much tax they supposed to pay. In case of Ravi, his gross income is 7,50,000. Standard deduction, in this case also it is allowed 50,000 off, but no other savings are allowed under this new tax method, right? So hence his net taxable income is 7 lakhs. Then apply the tax slabs, which are the new tax slabs you have to apply here. The first 3 lakh rupees is 0, next 3 to 6 lakh rupees is 5%, then next 6 to 9 lakhs, that is next 3 lakh rupees is 10%. But here his gross income is taxable income is 7 lakhs. 7 minus 6 on which you have already calculated tax, 1 lakh rupees. So take 10% on that is 1 lakh, right? 10,000. So this total tax which is coming in case of Ravi is 25,000. Now here again, like earlier case of Ravi, which I explained to you, the section 87A exemption bar which is of there of 5 lakh rupees in old method has been revised in the new methodology to the extent of 7 lakhs. So bar has been raised from 5 to 7 lakhs. So now in case of Ravi, here his income is 7 lakh, taxable income is 7 lakhs, which is up to 7 lakhs, and hence he is qualifying for exemption under section 87A, and that his whole tax of 25,000 which is coming will be waived off completely. So for Ravi, absolutely zero tax or no tax to be paid. In case of Sudha, in the same manner, if you calculate her net taxable income, which is coming as 9,50,000, so calculate tax as per the new tax slabs, and with this way, her tax is coming 52,500. Add says to that, and then 54,600 rupees tax Sudha supposed to pay. In case of Jay, whose gross income is 17 lakhs, now remember here, as I have already told you, this is the change which has been brought into effect recently, announced recently. If gross income is more than 15.5 lakhs, then standard deduction allowed, which was earlier rupees 50,000, now that bar has been raised to 52,500. That is 2,500 rupees more, but it is subject to condition of your income should be more than 15.5 lakhs. In this case, Jay is earning more than 15.5 lakhs, hence he is eligible for a standard deduction of 52,500. Apply all savings. Naturally, in this case, since he had chosen, we are calculating tax as per new methodology, hence no savings to be deducted. His net taxable income is 16,47,500. Now let's calculate the tax as per the slabs 0 to 30. Then next 3 lakhs 15,000, next 3 lakhs 30,000, next 3 lakhs 45,000, next 3 lakhs 60,000, and more than 15 lakhs 30% tax bracket. That remaining amount is tax is 44,250. So 1,94,250 tax J has to pay. Add says to that 2,02,020 rupees tax Jay has to pay. So here in case of Ravi, Sudha and Jay, we have seen if they choose old method, how much tax they supposed to pay, and if they choose new method, how much tax they supposed to pay. Let's do a comparison here. Old method Ravi supposed to pay 15,080 rupees, whereas in new method he has to pay nil tax. So his saving is 15,080. So it is very clear, if your net taxable income is up to rupees 7 lakhs, then new method is beneficial for you here. So what is beneficial is new method. In case of Sudha, as per old methods, he is paying a tax of 36,920, whereas new method she has to pay 54,600. So she is paying 17,680 rupees more in new method. Hence, for Sudha, old method is beneficial. In case of Jay, even though this incremental benefit is given, if you see, as per old method, he was paying or he is paying tax of 1,84,080, and as per new method, he is supposed to pay a tax of 2,02,020. So if you take the difference, Jay also has to pay 17,940 rupees more if he choose the new method. Remember or keep in mind here, no investment Ravi, Sudha or Jay they are doing, and we have calculated the tax. And here, in for your future, for your betterment of the future, someone has to do the investment. So here all these investments have been done, and accordingly tax has been calculated. So friends, it is very clear. You have to choose, you have to calculate yourself how much is your gross income, how much is your net taxable income, and then under which bracket you are falling, and which tax methodology, whether it is old or new, is better for you. You can choose that. Once you choose the new method, you cannot go back to the old method. Please keep this in mind. Also, new method is applicable to only individual and HUF. With this, I have explained you in 3 steps what changes are there, how it is impacting the various benefits which are there as per uh, 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 income tax rules. And that's second, what are the various slabs we have seen: old slabs, new slabs, and the recent amendments. And third, we have seen the 3 examples clearly to understand in this better manner. Friends, for this or for better understanding, if you still want to do, or if you want to get your tax calculated, or where to invest, how to invest, and what benefit you're supposed to take, or you're supposed to optimize your returns with those investments, feel free to contact Vijay Narayankar, that is myself. I would be happy to help you. Thank you.